this space. With that said, I would now like to hand it over to Umesh Kumar Daila. He's head of ETF sales at Mirae Asset Investment Managers, and he is going to have a very interesting conversation with Prakash Gupta, who's co-founder at Dhan, which now is one of the top 10 largest broking apps in the country.
Thank you, Pavitra, for the introduction. Today we have a very special guest who has seen the journey of fintech from Karvi days to here. He has a very strong credentials, so I have to take paper to count those. So he was heading Karvi e-broking from since 2006 till 2009. Then he was heading commodity and currency at Mangal Keshav Securities between 2009 till 11, and then he became founder and CEO of Moneylicious, which was established in July 2012, and then now as we speak he is a promoter of Dhan and also a co-promoter of Raise Financial Services. So welcome Jay for on this fireside chat. The objective of today's discussion is to just think about or to understand more about or maybe I must say to reimagine the Indian investors and the influence of fintech in it, because I'm sure we have seen that when it comes to stockbroking per se, the time has changed. I think from long back when I started my career, I used to see that opening a demat account used to be a challenge, and there were very few people who used to have, and then whoever used to have used to be in that office of that stockbroking firm, and full day they used to spend there while doing tradings and everything. And I think things have changed, and it has changed, I must say, dramatically. But I would like to understand from you what is happening, because you are being part of that side of the table. You can give us more clarity that how things are shaping up, how things are. So just to start, I just want to understand if you can talk about how broking industry has evolved in last 10-15 years, how it was earlier, and what are the changes which you are seeing right now.
Yeah. First of all, thank you so much, Umesh, for having me at your fireside chat. It's a pleasure to be part of Innowave 2024. And the way you have explained about my experience, I'm feeling a bit elated and a bit old, the kind of words which you mentioned. Thanks for that. I'd like to take you back when I was assigned a responsibility of setting up e-broking business at Karvi. Okay, the project was e-broking, but the way the technology at that point of time in India was and what it is today, there is a huge difference in it. And and coming to your question on what has changed in last 10-15 years, see, broking industry in India has evolved. I would say that. And say I just don't want to go 20 years back, but say a decade back. Okay, broking in India was more to do with leverage and pricing. What I mean by that is, see, any broker who would want to retain a customer or want to acquire a customer, the only the selling proposition at that point of time, I'm talking about retail broking per se, was what kind of leverage you allow to a customer. Okay, and how would you cut your brokerage or pricing vis-a-vis the client is getting from his existing broker. So those two are the primary incentives for a user to move from one broker to another, and for a broker to get a new client. Okay, the innovation about product and everything was always hovering around how you design, leverage and pricing, and how you bundle them and offer to a customer. Okay, the concept of having innovations in your product, bringing new features, creating that wow moment for a customer, those were not a great determining factor, at that point of time. What started changing was obviously in 2016. Okay, I would say that 2016 or 15-16, created the foundation from where the innovation, the use of technology and adoption of technology by retail users started emerging. it all started with government's initiative of going the digitized way. Okay, they introduced Aadhaar-based KYC. Prior to that, opening an account, as you rightly mentioned, was a tedious job. Signing 40 odd pages of a booklet, which was 50 pages, thick. And apart from that, the reach was not there, because for somebody who is in Assam and he wants to open an account with a broker in Bombay, sending a form and getting the form back and verifying whether everything was correct or not, that used to take 1 week. Okay, the things were bound to get slow. And with digitization, with Aadhaar-based KYC, things started changing, and that was one of the triggers which created a lot of interest. Users found it very easy to open their accounts, and they started coming there. The second big trigger which happened, which I feel, was when regulators decided to end the leverage from the market, right? So prior to that, any XYZ broker would just tell his clients, hey, you have a lakh of rupees, I'll give you 10 times or 20 times leverage so that you trade more. Because when you trade more, what I'll earn is a brokerage which will be higher, because the brokerage at that point of time used to be a percentage of your turnover. Okay, so that was a motivation for a broker to give higher leverage. But when the regulator made it mandatory that the leverage cannot be more than the capital which a client has, and that kind of created a level playing field for everyone. Now there was room for creating those customer experiences, bringing new features on the app, and the whole game of shifting from price and leverage to more about product and customer centricity, that started taking off.
So I must say what you said is right. A lot of changes have happened. It became level playing field. So what all events which happened, maybe if you can name few, which has disrupted this broking industry for last maybe few years, which is where we can see right now in industries. If you can name few, will be helpful.
See, I would say the primary disruption which started happening was when government took the initiative, which is a jam trinity, right? Where Dhan account was introduced. You had, Aadhaar-based KYC, and mobile was used for doing that. As people got into the bank, I would say that the unbanked, when they started finding an opportunity to open a bank account, okay, that made a difference from whole financial services perspective. From broking, the ease of opening your accounts through your mobile by doing Aadhaar-based eKYC, that was one of the moments, which created disruption. Second was when SEBI ended those leverage, and third, I would say, when earlier for any broker, the exchanges were providing a platform which was free of cost. It was just a plug and play thing for them. And that helped a lot of brokers to reduce their technology cost drastically. And since it was a product which was provided to everyone, nobody thought of innovating their own products. Okay. But when exchanges ended that kind of platform, okay, they were not providing it further. Okay, then the onus was on the broker that if I'm able to, allow clients to trade on my platform at the fastest possible time, what should I do, to create a mobile app? And that's how, the whole thing started, I'd say.
So I think it's right to say that digitization is something which is the key change, which has changed, and I think it is at a forefront, if I'm not wrong, in broking, if I talk about. If yes or no, maybe if you can just put some light on that how important for you as a broking, from a broking side, how digital or digitization is important for you, and maybe how you can reach out the wider audience through that. If you can just put some words on that also, will be helpful.
No, today, see, digitization is inevitable. You cannot survive without technology and without digitization. And I can, take you back in how the MIIs work. Right from exchange to clearing corporations to depositories, everybody is working on on kind of bringing everything on a real-time basis. From now, we have moved from a T+2 settlements, we are moving to a T+0 settlement. This will not be possible if the everything on the back end, on everything behind, which the MIIs created, that kind of infrastructure doesn't use or adopt technology. Okay, so technology is definitely at the forefront. Now, for intermediaries like us, technology plays a greater role because the user behavior has started changing. I'll just like to bring some data here, some number. Say, if you see the total number of demat accounts, the kind of phenomenal growth which we have seen. We'll come to the reasons for that later. But in March of 2020, the total number of demat accounts in India was 4 crore odd number. In October of 2024, that number is close to 18 crores. We have seen 4.5 times jump in a span of 4 years. What it took 30 years to reach 4 crore demat accounts, and from there, so we can, yeah. So second is, if you see the median age of a demat account holder in India has come down from 38 which was in 2018 to 32 in 2024. And the total number of demat accounts which we have now, which is around 18 crores, out of that 40% demat accounts are with the people who are less than 30 years of age. Okay, so it shows that and one more data, by the way, that every year we see that 12 million new people are joining the workforce every year, yeah, which is around 1.2 crores. Okay, so when it's combination of organized and unorganized, and for a person who has just joined the workforce, his salary is limited, and for him the first preferred choice of investment is having a demat account or investing through demat, because with his kind of earnings and salary bracket, they cannot buy real estate or they cannot buy any other asset class. Okay, so with this data, okay, if we see that the first time user, and apart from that, another advantage which is there is that these new workforce are tech savvy. Okay, they know how to use applications. They use technology to the fullest. They have access to information, and all this is translating to intermediaries like us to create that kind of seamlessness on our applications, on our trading platform, so that the user who adopts the technology well should be getting that wow experience on being on the platform.
So basically, it's experience also that matters. Now, as you touched upon that, there are the median age has come down. Now, if you can just throw some more light, that what is the customer base mix we have right now, maybe in the industry or at your end, if you can mention what is the age bracket you already highlight. Maybe if you can put some light on income bracket, what sort of risk appetite they have. I mean, the overall customer mix, I'm definitely sure would have changed, because traditionally investors' behavior changes, the choices of investment changes. So accordingly, I believe this mix would also must have seen some significant change. So how it is there right now in yours, maybe your side or in broking industry per se, if you have some data?
I'll give you data from an industry perspective, which I told that right now 40% of the demat accounts are of people who are less than 30 years of age. Okay, and as a country, our median age of the country is around 28 years. Okay, so we are a pretty young country. When you have a median age of 28, these people are risk takers. Okay, irrespective of what income bracket they are into, and with the advent of technology, with access to information, this generation, or millennials and Gen Zs, I would say, to put it that way, are aspirational. Okay, they want best of the products at the shortest possible span of time. Okay, and that applies to their investing behavior and trading behavior as well. They want something which is quick. Okay, they want something which gives them a lot of excitement. Okay, so this age group want to invest their way of investing and their way of approaching investments and savings and creating wealth is very different from the generation which is a decade old. Okay, so they want everything quick because of the social so I would say the social environment around, because they are hooked to social media where every post they put in, there is an expectation that it would be liked by someone, so that instant gratification thing is very high. Okay, so that also translates in their investing and trading behavior. So they want something which is quick, which is seamless, which values them. I'd just like to bring one data here. See, in India especially, I'm not talking from financial services, but in general, if you see the kind of benchmark which Amazon has set in terms of customer centricity, that they truly treat any individual or any customer as a king. How it works, we all know, right? If you want to return your product, if you want to claim a refund, there is no question asked. Okay, and once you have that kind of experience, any typical user, wherever he wants to shop, he wants to buy a product, he wants to order a food, or he wants to invest, has expectation of meeting that benchmark. Okay, so as an intermediary of financial services or a broking entity, we also have to keep that in mind, that am I able to meet the expectation of my user, because there is someone who has set that expectation very high. So today for a user, it's not about pricing, it's not about leverage, it's about how well you take care of your customer. The customer centricity has become the prime focus, and that is followed by your product and your technology.
So the old saying, the customer is king, is actually playing out here.
Exactly.
It's playing out here. Who is doing well is also getting rewarded from the market. So as you touched upon that investors are looking for investments and they are investing. So I firmly believe, this is my belief, and I think I've heard it also, that the time changing, the traditional way of investing are changing. The products which used to be liked by traditional investors, the old investors, might not be liked by new age investors. So whatever products were popular for 5 years back, they might not be popular now or maybe 5 years from here. So are you also seeing that similar kind of behavior in clients also? And second question is, are they investing? When I say investing, I believe it's a long-term investing. This is what we have been taught. Or they are very short-term, which whatever name you want to make it, or trading or whatever it is. So what is the mix there, and our investors are taking so much risk in that? Because I believe there can be FOMO also. So what is the risk appetite, what is the risk profiling which you are looking at investors in now, maybe current scenario?
See, as I told you, right, since our country is a young country, okay, so risk-taking appetite is very high. Okay, there's no doubt on that. Market always was risky, is risky, and is going to be risky. It's only way that how you approach market. Our earlier generation was more conservative. Okay, this generation has got access to information. They have got access to technology. Okay, so they are more open to go and take risk. Leave investing. If you see the other areas, like you have apps available which can provide you trading in crypto. There are apps available where you can go and bet on a gaming, on certain sports which is happening. Okay, so now since everything is available on mobile, this generation knows, or the millennials and Gen Zs of the world, they know how to, approach. Okay, or if you don't allow them investing, they will go and try their hands out somewhere else. Okay, so this is one way. Second is, the investing culture in India is growing, and we can very well see that the number of SIPs which is happening and the amount of SIPs which is happening through mutual funds, and this is all coming from retail. So people want to have demat accounts, people want to invest in mutual funds. So that also clearly reflects that people are more aware about how to channelize their savings into trading or into investing. So that approach is growing in India, and I think this is just a start. We are a huge country, 140 crore people. Okay, out of that, only 18 crore demat accounts currently, and that too, if you take the unique number, that unique number would be somewhere around 11 and a half, 12 crores. So there's a long way to go. And the acceptance of capital markets or mutual funds as a preferred source of destination, the momentum has just caught, and I think this will not stop anywhere. This momentum is going to continue, and we will see, the trading and investing journey both growing hand in hand in coming years in time.
So basically, you're saying that it's mixed. Maybe people are investing also, and people are taking short-term profits also, depending if they got what target they have in mind.
Absolutely. See, when somebody starts a journey, right? So, since, as you rightly mentioned, there is some kind of FOMO that my friend, my neighbor, or somebody on the social media has shown that okay, they have earned certain amounts of profit. So that also, is one of the driving factors for them to come into the markets. But with age, with experience, they also start learning that, okay, trading was one aspect. Then you graduate and you start diversifying your funds or savings. Some portion goes to investment, some portion goes to trading. And that's how the maturity happens. And as you have more inflow of demat accounts happening, with the passage of time, you will see that the first time users will evolve, they will become investors, and there will be further inflow of new users coming in. So as I said, that your trading base will also grow. Along with that, your investor base is bound to grow, because over a period of time, the new users will gain more experience, and they will start to allocate their savings, and the savings will definitely get channelized to investment products like ETFs, mutual funds, and some portion will also remain for trading.
Yeah, fair point. Also, just one just came in my mind while this kind of investor mix you have, and I'm sure they must be more towards stocks and all that. Are there investors who are adding ETFs also into their portfolios, or still you see that it is more or maybe very minuscule towards ETF? Or how's the trend? I mean, from a overall ETF perspective, because ETF also as good as stock market, stocks per se. So,
I think the adoption of our users are impressive, and it's growing. We are more a trader-heavy business, but the way we are seeing our users adopting to products like ETFs, mutual funds, this is very impressive.
Very nice. So, just last question to you, Jay. With we expecting by 2020, India will become third largest economy, and the per capita income will be somewhere between $4,500 to $5,000. And so, what do you feel that how Indian economy, this sort of growth in an economy or demographics which we have, which will help in terms of building the future of broking industry? Would you see that by that time where the industry should be and would be? If you can just add.
Yeah, that's a very interesting question. See, we are around 2,200 at per capita. You are saying that if you become double from here, I think the inflection point will come when we reach $3,000 per capita. Post that, I'll see that, we will explode, I'd say, because so every ingredient is available, that we become a more inclusive, economy where financial services, financial awareness, financial literacy, they will all come into play. Okay, so there is a lot of room for, product innovation, because aspiration of a citizen changes drastically when they go into that higher bracket. So right now from 2,200, if we cross $3,000 per capita, there will be a lot of aspirational needs coming. They will have, they will be more aware about their savings, about how to spend, how to lead a quality life, how to buy aspirational products, and that we have already started witnessing. Now, if you go to any a first time guy who has got a job for the first time, for him buying an iPhone is not so tough, because they have access to easy credit, and that's how we are going that way, where people will tend to save less and spend more to meet their aspirational needs. Okay, and that will create a lot of opportunities for products, into financial services space. I think going forward, even a broking platform, they may also need to think about, like whether they want to be in all spaces where a user once a user comes to the platform, he should not go anywhere else. Whether he can have investing, trading, borrowing, creating something for their future, insurance. I think those plays will be the next big move. Once we move to that kind of a per capita income.
Well, so that's an interesting, I think, answer, I must say. Just to summarize, if I say future is bright, we have to keep on watching this space. I think investors are not only adopting stocks, they are using these platforms for other investment avenues also, like ETFs, mutual funds, as you said. And I think the way Indian economy is growing, I think this broking industry should also grow. But investors should also keep in mind that what they are entering into and what sort of risk appetite they have, whether they are ready to take that much of risk appetite. With that, thank you so much, Jay.
Thank you so much. It's my pleasure.
Insights.
Thank you.
Thank you so much.
Thank you.